Welcome back, everybody. I know everyone's freaking out right now. What's going on with the U.S. economy? Is like inflation going to keep going up? These gas prices are ridiculous. Mortgages. What's going on with the 30-year mortgage? Why are they? Why do home prices keep rising so much? And these are some of the things we're going to cover today to try and demystify them or see where things are headed to potentially help you out and to help you position yourself and your family for what's to come or what may come. So let's start off with this video that I posted about, was it a month and a half ago or so, or maybe almost 2 months. Um, but pretty much I spoke about the DXY, which is the US dollar, and it showed that it was pretty much topping off, as you can tell here from this trend. Now, I did say it is possible for it to go up, and we're going to check in today and see how that's gone. That prediction has gone. So we did come up here to the next level. So you can see same level. Came up here to this level, touched about 105, about 105. You can move it down here, about 105. And then currently it's on its way down. And these candles are actually 2 week candles. So over the course of 2 weeks, it's been pretty much on a downtrend. Will that continue? I do not know. However, like we previously stated, it is pretty high and it's been hitting the top of that channel. Aside from that, we've been adding, well, they want to pass more stimulus or other bills to help with stuff that's going on in either Ukraine or here. I believe there's like a student loan forgiveness that they're trying to pass for like $10,000. But that's something we're going to see in the next couple of days. So for right now, all I know is we're at the top of this channel and we're currently in red. And as you can see here on the RSI and the Stoch, it looks like it's just getting started. So if we go to the higher time frames, generally these are indicators where you don't want to be putting your funds or holding your assets in dollars valuations. You'd rather move perhaps to another asset class, maybe commodities or maybe stock, in my opinion. I know there is a lot of fear in the market, and we're going to look at that with inflation, because inflation is going rampant, right? It's going crazy. So what you have in the orange is actually the CPI, so that's inflation. And then we have these candles are actually the US oil prices. So if you take a look, we're following similar type of a price action between the both of them. It's almost identical. So the reason I believe this happens because, well, when inflation goes up or when costs go up, like fuel prices go up, then everything generally like goes up. Why? Well, if you need to get like food delivered or like any physical items that cost gas. So when gas prices goes up, everything generally goes up. But as you can see here, generally once we reach the top of this channel, boom here, boom here, we still may have room to run. I'm not sure if we are going to hit the top, but this area has been known to be a resistance area, and generally we have come back down from this area. So as you can see here, we have a little spike down from inflation. We expect that to continue, but as you can tell here on the Stoch, it still hasn't crossed the downside, so you may not see anything dramatic, and it is possible for it to take some time. So let's say it keeps moving up. So from the top of the previous point, reference point that we have, let's see, so June of '08 to the bottom was about January 9th. So about 6 months. About 6 months it took for this to to finish its downtrend and then start moving back up. So if we have something similar like that, then we are probably looking at sometime December, maybe early next year, for us to come back down if it were to happen right now. Like I said, we might have room to run a little bit higher, but this zone is generally known for reversals back to the downside, because this is very high. People are feeling the prices right now of gasoline and just overall inflation. So if you have a work from home job, be thankful that you don't have to be paying for that stuff. But unfortunately, in our groceries or in the products that we buy, there's still costs that are related to that. And it comes from gas prices, or inflation, if you want to think of it that way as well. So that's something to keep in mind of. I personally don't see us staying here for too long. 6 months, yes, it's 6 months of pain, but anything that happens that's bad, just remember that it doesn't last forever. Anything that's good that happens, it also doesn't last forever. So nothing lasts forever. So appreciate the good times, and just remember that the bad times aren't going to be here forever. Let's look at mortgages. So what's going on with the housing market? I know a lot of people have been buying. Some people have been thinking it's going to crash, but it doesn't. So let's see what's been going on. So here's another long-term chart for you guys to check out. We generally trade within this range. This is the 30-year fixed rate mortgages. So generally people who are like long-term home residential buyers take out these loans. They're not cash offers from big institutions. So something to take a note of is that the average price generally ranges within this channel. However, we did have a break to the downside before, back in 2012, and that was when prices bottomed out, if you do your research. And then after that, we went up, down, and now we are over here, which is super not normal. We haven't had this type of price valuation since 1984. Some might even argue even before that, 1980. So if we do take another channel up, I do not know who is paying for these ridiculous prices. I am not. I would personally rather wait, but that is just me. I understand interest rates are low, but you're stuck with this for 30 years of your life. So make sure you do your research before anything. You can tell here that RSI kind of just whoop, it wants to come down. So this area, once you get within this area, it's been known for areas of downturn. And I know people think like it's my last chance. It's the only opportunity that I'm gonna have when our interest rate's gonna be this low again, and that's you never really know. So you just have to weigh your options. However, like I said, this is not normal average price action for the U.S. So more than likely we are going to be headed down, especially with what we have. People are not being kicked out from their homes. I know there's rent backed up right now for like commercial complexes and stuff like that. People aren't paying. So all that stuff is eventually going to add up. Eventually, the system can't support that unless there's going to be more bailout, more inflation, more stimulus, more checks, and that is overall not good for the dollar, which is, it is possible for happen. And when that does happen, it's going to devalue it, and it would make sense. Now, I'm not saying that it is going to happen, but it is a possibility. But as far as the dollar being overvalued, it is pretty high right now. It's already reached its cap areas. So I am not in the dollar right now at all. I'm not for it. So back to these markets. We have the 30-year delinquency rate pretty low still. This red line is the delinquency rate. So if you notice, we have, everyone pretty much pays their mortgage fine until what happened here. Oh, there's an uptick. This was when? July or 08. July crossed up here, and we had this huge spike of delinquency. So people weren't able to pay for their homes or their mortgages, and that lasted for quite a while. So 2012 is when it bottomed out. What happened here? When did people bottom out as far as for the average home buying prices? 2012. So when they're able to start paying again, that's kind of when the market bottomed out. And what happened after? Buying, and prices kept moving up. Then we had a small downturn. Well, I'm going to say it's small. because I think we're gonna have a bigger one. But we had a downturn that wasn't as chaotic. I'm not sure if this one's gonna be not straight down, but at a more linear trajectory down than this longer one. So from November 2018 to December 2020, we're at this decline at average home buying price. So this would have been a good time to buy. If you didn't, you can say that it was my last chance. Was always opportunities. Sometimes you get lucky, quote unquote, or you well prepared enough where you can kind of see things happen and be ahead of everybody else. So these are some of the things that are happening, and everything's pretty much correlated. You have inflation, you have the US dollar, you have the mortgage rates. Most of it is overvalued. Mortgage rates are really high, or the average price that they're paying right now. Then you have US soil. You have US soil that shot up, inflation shot up, the dollar is up, and as you can see here, generally they're already hitting like their cap areas, cap on these technical analysis indicators. Now, there is a such thing as prolonged periods of time where they stay above. However, it just depends on how you would like to position yourself. So let's check on what's going on with Bitcoin. I know everyone's freaking out. And we have had this huge down spike. Normally, I would have said, which, to me would have been okay if we would have moved back up, which to me makes sense with all these things going on. But we did have that war with Russia, or at least Ukraine does, and the US is kind of backing Ukraine up, which generally leads to higher fuel costs, which generally leads to inflation mixed with like all the stimulus that we had from COVID. So it hasn't turned out the way we had hoped. However, we are currently on a trend line that has been held up since 2020. And this was the Black Swan event, or the COVID crash. It happens with all the markets. So it's not just Bitcoin or any other of the cryptos. So this is something to take into consideration, and then use that in your analysis with the mortgage, the US crude oil, with the rising inflation, with the US dollar. Everything's pretty much correlated. So let's see what's going on with the S&P. S&P. Oops. S&P. There we go. I just do the SPX. So same thing with the SPX. We had this huge downturn. Let's check the monthly, how it monthly looks. So this is the COVID spike. We had this COVID spike down, boom, scared everybody out, and then it just reversed and made what? 97% gain. So 100% gains for the SPX, or the S&P 500 index. So that's pretty interesting. A lot of people that couldn't handle this took their money out and either lost or weren't as profitable. So as you can tell here, what happened. Let's move this. And let me add this for clarity. Actually, let's do this rectangle. And let's copy this over. Let's clone it. And just for referencing purposes, let's add this one and make it a buy. So what I'm doing here is I'm trying to illustrate what happened before within these ranges. Now, will that happen again or not? I do not know, but generally this looks like a good buying opportunity for me, or at least less risk to a higher reward ratio, in my personal opinion. So whatever you choose to do with your money, make sure it's for you and your family, don't listen to what I say, because my situation and your situation might be different. Let's take a look at a couple others though. So another time that this kind of like bottomed out here, and then what happened, there was a cross back up. Now we did have a double before we went to I guess you could say all-time highs before the drop. But if you would have bought around here, this drop here, when it was holding, boom, you had a quick up, then you had another down. And I personally would have probably doubled here, doubled in, and got that high. Over here, it was a bit unexpected with the COVID crash, so I can understand if you were freaked out. I believe a lot of media and mainstream resources that people use to get their news was not helpful to the average person. So that's something to keep in mind of. Now we have a lot of people just roaming around without masks, but I do understand that that was a precaution that could have gone either way without the necessary information to combat it. So I'm not going to talk much about that. I just will say that mainstream media news is probably not the best place to get your news. But do your own research, see what you think. You have various forms of investment. You have commodities, gold, silver, what was it, platinum, lithium. You have oil, which I'm not a big fan of, so I don't invest in that. Plus, I think it's overbought, or at least in that range. Then you have home prices. I know a lot of people, a lot of friends have been wanting to get a house, and they feel like it's their last opportunity because these interest rates may not come again. There's always opportunity if you're prepared for it. So if you're able to prepare for this downturn, maybe you might not catch these low interest rates now, but whatever you position yourself in, once the price comes down of the homes, you will be able to purchase it. So rich people, or people that can pay in cash, and I'm not saying that you can or everybody can, but they generally try and buy at these low areas, which is where like the market bottoms out. So that's something to keep in mind. How do these people have enough funds to pick up these opportunities? Because that's all they are. They're just opportunities. When you bought oil, you don't want to buy it high like with anything else. And oil actually, I believe, went negative for a while during the COVID crash. So if you would have picked up some oil, you would have been up pretty significantly. That is about, that's huge. That's 4,700% from January 2020. Oh, I'm sorry, not 2020. That is, just gonna move that over. April 2020. So that's in 2 years. That's huge, because the stock market generally doesn't give you that. So that's something to keep in mind. You have to try and look for these opportunities. If they're easy to find, no, they're not easy to find, but over time they become easier as you become used to technical analysis. You become used to reading charts, data, interpreting information. So I always ask you guys to do your own research. I hope you do. I hope today has been helpful and you guys are able to position yourselves and your family in a position that'll help you out and be more beneficial to you guys in the future. So this is Mr. Ordinary, and thank you for enjoying Mr. Ordinary Talks. Talk to you guys soon.